Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 11th, 2016, and today's Monday morning. So looking at the economic calendar today, nothing on the venue today, but we are on the back of the NFP report last Friday, and I'd like to go over some of the moves that we had since last Friday. Looking at the EURUSD, we had this rally last week. This is a weekly chart. Let's look at a 4-hour chart. We rallied up above 109.55, and then we sold off right afterwards. Ultimately speaking, we are trading in this trading range for quite a while. If we look even on a daily chart, we've been really trending between this 116 on the upside and 105-ish on the low side. So there's no clear trend with the EURUSD. However, we look like we're firming up. If we look at a monthly chart, rather a weekly chart, you can see that, albeit that we've come up from these lows of 106, we aren't selling off. There isn't like this sell-off where we're going below 108.28, 107-ish level. If we did, we dipped. When we did dip below it, we rallied right back. So we're in this range between 109.28-ish level and 108.28, which is a 100-pip move if we look here between these two extremities. So what's nice about it is that it looks like the euro is firming up. So my prediction for 2016 is really that it's going to rally into the 115 and challenge the 115, maybe even go up to 119, 117 level this year. That doesn't mean that it's going to happen today or anytime this week, but obviously over the long term of this year, it looks, at least at this stage, that the euro is firming up, and it's firming up on its upper range above 108. So that's really a strong indication that it may really rally into the year. Looking at the USDCAD, this is a trend, okay? This is a monthly trend. If we look at this, it's a huge rebound in the USD versus the CAD. The CAD really weakening versus the dollar at 141. And we're continuously going up higher, and this is really due to the price of oil, as Canada is a big producer and exporter of oil. So, it's really hard sometimes to trade these type of currencies or these type of breakouts, because, just when you think it's going to retrace itself, it rallies right back up and it continues to rally. It sells off, doesn't really sell off, and many people start saying, oh, this is the top and I'm going to short it, and then they find themselves, no, this is the top, and they keep on fighting the trend, and the trend is going upward. So the trend is your friend here, and we set it at 132, where we weren't sure if it was going to go higher, and then we finally broke up above this 133 level right here, as you can see, and then we've just completely taken off. We got to 139, just shy of 140. We sold off a little bit, which was healthy, and then we're above 141. So I mean, to say the truth, it's the sky's the limit. I mean, we could continue going up to 159, certainly to 2001 and 2002 levels, which we were at. So quite a depreciation for the Canadian dollar. And on back of that, let's go into oil. Oil trading at 32.27 last week. Big sell-off last week. And we had mentioned this. We had mentioned that it couldn't sustain above this 37.91 level, and completely sold off to 32. So it's good to keep an eye on this, and good to see what's going on vis-a-vis each other. Looking at the Dow Jones, big sell-off last week, and we're breaking all the support levels, and we may revisit, and we are revisiting this, where we were in August of this year, which was at 116,000, I would say. And the question is, are we going to bounce from this? Because this is a tremendous sell-off all to happen in 1 week, especially off of China's news. I'm a little bit cautious going into 2016 with the equity markets, because we've seen that after every bull run, there's usually a bear that comes right afterwards. And this is exactly what's happening. I mean, you know, if we're looking at a monthly calendar here, we still have way more to go in order to make a correction to go back to 2011, 2012 level. You know, this is the funny part. It's when we start selling off that you hear news outlets saying, oh, it's going to be a disaster just like 2008. It's going to be a disaster where it's the end of the world, blood in the streets, market just topples 300 points, 500 points, and you hear all this stuff in the news. And you know, this is my third or fourth cycle with a bear market, and this is really what happens. This is indicative of a bear market. I mean, we have these tremendous moves. What I would suggest for a new trader is just to, you know, initially just seep in some of the information and see how this plays itself out as opposed to trading it, because you know, initially you don't know what to expect and how to expect from the markets, and so it's a little bit harder to trade. One thing is for sure, we're in a choppy market, we're in a very volatile market. It's more of a scalper's market than a swing market. The moves are extreme and they're not necessarily consistent day to day. So what I would suggest really all the traders really, you know, book your profits quickly. You know, you do get your profit, you know, ease them out, and make sure you don't let your losers get out of hand, because it could really be disaster considering how volatile the markets are. So we're selling off to 16,600. We are at somewhat of a support level here. It'd be nice to see, especially at 16,000, that it's a round number to see it bounce. Some of the big bellwethers on Friday were still green, so I'm not inclined to say that we're, you know, going to sell off necessarily this week. So those are some of the items that I had in front of us today. This is Fred Razak at CMTrading. I want to wish you guys a great trading day. Thank you.